Hello and welcome to ET Now. You're watching IPO Central and my guest today is from Seshaasai Technologies. It's a company which provides payment solutions to the BFSI segment. The IPO is opening on 23rd and closes on 25th. Price between 402 to 423 rupees per share. It's a fresh issue of 480 crores and OFS of 333 crores. So it's an 813 crore IPO that values the company at a little over 6,800 crores at the upper end of the price band. And joining me is Mr. Pragnat Lalwani, who is the chairman and managing director of the company. Sir, thank you very much for joining us on ET Now. Sir, give us a sense of your business operations. You are a solutions provider, also card provider. So give us a way of understanding for the investor what exactly is the business model for you.
See, to put it in very simplistic terms, today in every Indian family household, there is, you have seen debit cards, credit cards, checkbooks, you have your bank statements, bank communications, life insurance policies, general insurance policies, you have your forex cards, gift cards, you have your citizen identity cards, your tax identity cards, fast tags, etc. We as a company have been serving as a vendor partner for about 30 years to the customers in the BFSI space, and we have been processing, manufacturing and dispatching these goods to millions of our customers, of our BFSI customers. So these offerings of ours are structured into three business verticals. We have the payment solutions vertical, which is essentially the payment cards, the checkbooks and the QR code, etc. that we do. Then we have the communication and fulfillment solution vertical, wherein everything which is data driven, could be your bank communication to your insurance policies. We also have logistics management and a platform for corporate supplies for customers. And then we have the third vertical, which is the IoT vertical, where we have RFID tags such as fast tags, tags for the retail sector, manufacturing, logistics, and also the SIM and the eSIM part in that business. So this is broadly the three verticals of our business in which we operate.
Also, if you can give us a sense of what is the kind of growth that you see in these segments, because I was looking at your numbers. Between FY24 and FY25, there has been a bit of degrowth which I've seen, though margins have gone up during this period. So can you give us an idea why it's looking like this?
No, it's a very good question. See, essentially, if you look at it, we need to step back and see our revenue in FY23. So our revenue in FY23 was close to about 1150 crores, and from there in FY24 we reached a revenue of 1550 crores. Now this obviously was a very formidable jump, which we are very happy about. Also, if you see in the book, we have disclosed that in that financial year we had some of our customers having a bulk one-time projects that came into us of the value of about 150 crores. So if you correct that factor into it, then FY24 to FY25 we've grown at about 5 to 6%. Obviously we had planned for much better, but we had one or two of our customers who had some embargo in terms of their account opening, and we had some changes in the policy with regard to co-branded credit cards. Also, some of our contracts which were to start in Q1 of this calendar year got slightly delayed. So that's why the growth rate was slightly lower, but we are well poised to continue our growth journey in the years to come.
How dependent is your business to the credit cards issuances? Because we've seen in the last 1 or 2 years that there has been a slowdown in that segment. In fact, regulatory interventions have also led to cooling down of that segment as well. So are you looking at a modest growth coming in there, given that there is a regulatory supervision now coming into credit card issuances and the kind of lending that is happening through credit cards, so that makes it little slower in growth for you?
See, essentially, if you look at our card business, right, we have multiple product streams within the card business, right? So our major driver of our card business obviously is the debit card business. Then we have the credit cards and the prepaid cards. And within the debit card also, what you see as the growth driver, obviously, we have the financial inclusion programs, the direct benefit transfer schemes of the government. We've got recarding of the cards that needs to be done. We also have travel cards which are coming in with the kind of metros that are proliferating across the country. And we also see here that the credit card has two bases to it. One is obviously the current base where there's a recarding happening, and obviously there's another base where the new cards come in. So in a sense, if there is a regulatory change that happens with regard to credit cards, right, of our total card base at Seshaasai, the credit card business is close to 8 to 9%. Right, so it really doesn't impact us too much, but we would love that going forward as the market expands, the credit card growth really picks up. So for us, the growth comes in from the debit card segment, and we also focus a lot on fintech partnerships, where we have a lot of prepaid cards that go out. We see a lot of forex cards going in with citizens traveling abroad, etc. So all in all, for us, the debit credit card segment does not really dominate our growth projections.
Do you see some bit of moderation coming, given the fact that we are moving towards virtual cards, and that's something as it picks up, it will bring down the number of physical card issuances there, and as a result, solutions will be the one which will be driving growth and margins for you.
It's a very interesting question. See, virtual cards, if you see in the marketplace, has not been something which is new. Virtual cards have been existing in our market for more than a decade, right? And people have different use cases for different kinds of modes of payment. So virtual cards is something which has already been factored into the consumer behavior today. And irrespective of people using virtual cards, they have different use cases for different scenarios of the plastic cards. So we don't see virtual card as a product challenging the physical card growth per se, because the physical card typically has a role to play for a consumer for his spending, and it is here to stay. Also from a debit card perspective, you see when a customer opens an account with a banking customer, right, a debit card comes to him as a part of this onboarding and a relationship with the customer has with the financial institution. And today, whenever we talk to our customers, what we find with the customers saying that today everything has become so nameless and faceless that the physical card also establishes a connect between the customer and the brand. And customers feel that it's a strong brand connect that also it brings between the customer and the financial institution. So we don't see virtualization of cards being any threat to the debit card issuances as such.
Is it also possible for you to give us an indication of how the margins move between various segments for you, from cards to solutions and the communications that you look at?
Yeah. So essentially, how it works is that typically we have the three verticals, as I said: the payment solution, the communication solution, and IT solutions. Across these three solutions, we have a lot of shared resources in terms of our tech platform, our infrastructure, some of our key resources, the IT backbone of the organization. So we have a blended EBITDA which comes in okay, but on overall level, we could say that the payment solutions vertical and the IoT solutions vertical, their margin would be a tad higher than the communication solutions vertical. But we don't have a policy of monitoring vertical-wise EBITDA.
But 24.6% blended margins, is there any scope for pushing it up here, or is this a nominal level of margin that you see for your business?
I think considering the future business visibility, we feel that we will be good enough to be able to maintain this EBITDA level as we go along. Yeah.
Give me also a sense of the emerging verticals within the financial services space. Now you are looking at banking and insurance as well. There are other verticals that are coming in, whether it's from capital market side or from wealth management. Are these some of the opportunities that you're looking at as well?
So essentially for us, as more and more affluence comes in, okay, so we at Seshaasai were the first card manufacturer in India to have our metal card certified by the global payment schemes. And globally, if you see, there are only a handful of card manufacturers who got their product and facilities certified to be producing metal cards. So as we see more and more affluence coming in, more and more customers going up the wealth value chain, what we are finding with our customers is that the entire customer experience in terms of the unboxing experience, the welcome kit, the quality of the deliverables that go to them have to be of definitely higher level of sophistication. So that's where we feel that in this wealth space, etc., the metal card delivery and the metal card product would play a very big role in in addressing that segment.
And where do you see the maximum challenge or biggest headwind that you see for your sector?
I think the only headwind that probably one would see is the regulatory headwind, right? But other than that, from a execution perspective, if you see at Seshaasai, we have customer relationships for more than 2 decades across all our customers, right? Very deep entrenched relationships. We have infrastructure at 7 locations across the country, all certified. A very good track record relationship with the customers. So, from a opportunity perspective, we are very well positioned. But it's just that regulatory changes is something which is beyond all of us. So that's the only one thing which we keep our eyes on, that gives us an indication of where the businesses are going.
What would be the total borrowing for you after this IPO, because you are going to use 300 crores for repayment of borrowing, and there is a capex of 198 crores odd which is coming in as well. So can you give us an elaborate on what the capex is about, and post the repayment of the borrowings, what would be the leverage or the total debt on your books?
So we have debt as of March 25 of about 350 crores. So post the IPO, we will be repaying close to about 300 crores of debt. So we will be having about 50 crores of debt on our book post the IPO, yes.
And the capex would be about means 198 crores. What is it regarding?
Capex is close to about 198 crores. Yeah. So capex is essentially for all our 3 verticals. A majority of capex is going to go into capacity building infrastructure for our IoT vertical. Some of it is going into enhancing our capacities for the payment solutions vertical, and some of our metal card capacities, and then some portion is going for general upgrade and modernization of our infrastructure, which is common across all the 3 verticals, which could help us save energy, manpower, and bring in more efficiencies.
Mr. Lalwani, it was a pleasure talking to you today on ET Now. Your IPO is opening on 23rd and closes on 25th. 402 to 423 is the price band. It's a fresh issue of 480 crores and OFS of 333 crores. So 813 crores is the IPO, and the company is valued at little over 6,800 crores at the upper end of the price band. Thank you for watching today, and Mr. Lalwani, thank you for joining us on IPO Central.